Hi everyone! Welcome to Whiteboard Crypto! Today we're going to be talking about crypto taxes. It's just general knowledge about crypto taxes. Please consult a professional for your specific situation because everybody's different. Now, that being said, let's dive in. Save money legally in 2025. Let's get it. You actually get to deduct losses from your taxes just like you would with stocks. All right. So right off the bat, I want to say this video is not tax advice. Well, you've made a $10,000 profit, and you're going to have to pay taxes on that. So if you're just holding on to your crypto, you don't have to worry about paying taxes on it just yet. Also, if you want to learn more about cryptocurrency, check out the links below. But if you decide to sell it, make sure you set aside some money for taxes. Or let's say you bought $10,000 worth of and then you sold it for $5,000. So if you're feeling generous, you might want to consider donating some of your crypto to a charity. Just make sure you keep good records of your donation so you can claim it on your taxes. Well, you've taken a $5,000 loss, and you can deduct that loss from your taxes. For example, if you're a miner and you receive crypto as a reward for your mining activities, you don't have to pay taxes on that until you actually sell it. Same thing. If you're staking crypto, you don't have to pay taxes on the interest until you actually cash out. And if you're just holding crypto and its value goes up, you don't have to pay taxes on that unrealized gain. Don't forget to hit the subscribe button so you don't miss out on any future videos. But if you sell some of your crypto, then you may gotta pay taxes on the difference between what you bought it for and what you sold it for. So anytime you sell, exchange, transfer, or dispose of your crypto, you may have to pay taxes on the gain. Thanks again for watching, and I'll see you in the next video. So this includes things like trading on an exchange, sending your crypto to a friend, spending your crypto on goods and services, or even using your crypto to buy a car or a house. So basically, anytime you use your crypto, you might have to pay taxes on it. So the first thing that you need to know is that crypto is treated as property for tax purposes. What does that mean? That means that when you buy and sell crypto, just like when you buy and sell stocks, you might have to pay capital gains tax. The IRS considers cryptocurrency to be property for tax purposes, much like stocks, bonds, or other investments. So any profit you make from buying low and selling high is subject to capital gains tax. Now, if you're thinking, well, I bought and sold it for a loss, do I owe the IRS money? The answer is no. Now let's talk about what types of crypto transactions trigger taxes. Now, there are some exceptions to this rule. So, for example, let's say you bought one Bitcoin at $10,000 and then you sold it for $20,000. Now, I know that was a lot of information, but the important thing to remember here is that you do not have to pay taxes on your crypto trades unless you actually sell or exchange your crypto for something else. That being said, if you have any questions about crypto taxes, please leave them in the comments below, and I will do my best to answer them. All right? That's it for today. Thanks so much for watching, and I hope you've learned something new. Oh, and here's a bonus tip. If you donate crypto to a charity, you might be able to take a tax deduction on that donation. All right? That's all I got.